exposure to FTX. How much do they owe you?
You were actually quite surprised to see ourselves on the list, but they're a customer of ours. So of course we become a creditor in that extent. I can't share the exact number. I can just say like they're a regular, like medium to smaller customer of ours, and in that extent they become a creditor. That's very long down the list.
Why can't you give us a number? And I also wonder, Michael, did you accept payment in FTT or any other tokens? Do you accept tokens generally as a form of payment for many of your customers?
No, so we always had the policy in Chainalysis that we don't accept tokens, we only accept US dollars. We do accept Bitcoin, but they're converted on spot at the time when they transact into US dollars. So we only hold and accept US dollar payments from customers. And the reason why I don't want to get into the number is that like we don't share our prices and we don't share like details around our customer contracts.
Michael, good to see you again. We spoke some time ago, and since your business is sort of forensic analysis of what's happened on the blockchain, I imagine you're getting quite a few calls trying to understand what the fallout from FTX is. How much systemic risk is there within crypto, you think, that's being exposed during this period of time, where from stable coins to FTX and Genesis, et cetera, we're seeing dominoes fall?
So I think like the extent of the risk, what I said back in the times of Celsius and 3 Arrows is that dominoes, when markets like go down, we have a bear market. We definitely see that there's been leverage in the market so far. And when that happens, then one domino falls, another one falls after, and another one falls maybe 6 months after that. And that's what we saw right now. This was by far the biggest domino that fell right now. And if you look at the rest of the market participants, there's like different kinds of risk associated to this, right? So we have indirect exposure from people who will trust Bitcoin, who will get like attached to the different prices of crypto, and at the same time we have direct exposure from those who have funds directly like on the FTX exchange, and now they are very liquid and very hard to get hands on. And that will probably cause a little bit of more like downfall in the industry, but it's hard to assess exactly how much, because many of these things are not on chain. Many of these deals are actually happening more like, let me use this as a collateral with you, and then I get a loan from here. And I can't see that on a blockchain because it's not on chain.
Right, and so it's partly the leverage in the system, I guess, is what you're saying, and leverage that's partly based on coins that have as much value as people believe that it has. I've used the Chuck E. Cheese token metaphor before, and some crypto fans got insulted, but I think it's more relevant than ever today. How long is it going to take to unwind the amount of, or uncover, I should say, the amount of leverage that's in the system that in some cases is going to amplify the effects of these dominoes falling?
So it's usually, the effect of these things usually takes several months to uncover, right? So it takes a while to figure out what is the size, what are the impacts, and so on. And we have seen in the press recently that other companies have come out and said, like, we had a big exposure to this, this will mean this and that. And some have like said we have big exposure and we actually still don't know what it means. So that takes some months to uncover and figure out. And then there can be, as usual, there can be more hiding. We didn't know that the exposure that FTX had to 3 Arrows, but that became pretty clear right now. So we definitely see that there might be other things hiding. So a couple of months it usually takes before there's a good understanding of the size of this.
Michael, so your company provides compliance and investigation software to, quote, hundreds of top institutions. But the biggest scandal in crypto was right under your nose with one of your own customers. How do you think about protecting customers or your clients from potential bad actors in the space? And how much do you know about your own customers?
So what we know about our customers buy our compliance solutions. For example, transaction monitoring. They want to ensure that their customers are not involved in criminal activity in one way or the other. So that's basically the involvement we have with our customer. So we cannot say whether their balance sheet is okay, and we would not do that check. It's very similar to if you take a company like AWS or any other cloud provider that might have be a bigger creditor than ours. they would not go in and check the balance sheet of customers. They simply assume that businesses are liquid, and especially when you see them backed by big names and have like a lot of interest around them.